Yeah, hello, what up my people? Welcome back to my channel once again. So I'm going to be sharing my trade recap on Euro USD, and this is actually the 30 minutes time frame. Now, how did I actually catch these trades? What are the confluences I actually looked at, and what are the things that I actually used and the rules that I actually used to enter this particular trade? Okay, so first and foremost, this is Euro USD on the 30 minutes time frame, and irrespective, on 25th August on this particular candle, you will notice that is the NFP candle. This is the news candle, and after the news halt this particular psychological level, it trapped the market on this level. And after NFP, most of the time I used to look for corrections. But this particular time, I didn't see any correction because it was on the Friday. If you look at here, this is the Friday candle. And irrespective, this Monday started at around this place, this particular gap here. This is where the new week started on the 30 minutes time frame. So what I was looking at was this particular consolidation for 2 days. For 2 days. This particular consolidation happened from Monday to Tuesday. And when I was looking at, I saw this loan order block. This loan order block plus a lot of liquidity that did not mitigate even the week of the order block. Even the week it did not mitigate it. But now, if I am on a higher time frame, what do I always look at? I look at only the body candle. I don't mark the week. Now, what did I also look at again? I used my Fibonacci level to know my support level, to know where the market is going to mitigate into. So what I did was to use my Fib level to draw from the top of this candle to the bottom of this candle, and I kept my support at 0.618 level. And can you see 0.618 level? These are all our consolidation. Now, I always say this: the moment you see consolidation before your point of interest, it gives you a high probability that this particular setup is going to hold. That consolidation before your point of interest is the most important thing you need to always look at while you're trying to take any order block or any point of interest. So that was what happened here. And after I saw this 0.68 level, can you see this is my support level? This is my support level. And when the market came into this level, what did it do? It tapped into this particular support level, tapped into my 0.5 level. Can you see? And immediately started reversing. So I entered this trade on Tuesday and I got out of this trade on Wednesday. And irrespective, this particular trade cut us a 10:1 RR, and we cut out at this particular level here. If you go to my other post, you are going to see how I actually started this particular trade, because I normally keep most of my starting of any particular trade. So irrespective, what I was looking at was this particular major resistance. There is a major resistance here. Can you see it here? There is a major resistance here that I have already drawn, but the market did not tap into the major resistance. But after I saw that particular run, what did I do again? I went back to my 5 minutes time frame. So for the market not to mitigate this particular major resistance, what am I looking at again? I'm looking at a market structure shift. But now on this particular trade, what I did was that I didn't wait for the mitigation of that market structure shift. If you look at my remaining posts, you're going to see how I entered this trade even before the market structure shift. So what I was looking at was, this is already a protected high. So what I was looking at is, this is already a protected high. This high already is protected. I saw the mitigation of this particular level, this particular OCL, but irrespective, I didn't enter immediately. I waited for confirmation. The moment I saw a little drop, the close of this particular candle, immediately I entered the market. and immediately I entered the market, I knew that this market was going to be a market structure shift here. I entered the first trade. It's actually on my previous post. You can see how the market started. I knew that this was a market structure shift. After I saw this market structure shift, I knew that it was also coming to mitigate this minor resistance. I call this a minor resistance. Can you see? This is my minor resistance, and irrespective, the market came, tapped into the other trade also, and started giving us immediate 4:1 RR, and this one is a 6:1 RR. Now, why did I get out of this trade here? Normally from beginning, if you look at the previous post, you will notice that I actually brought my RR to this particular level, but I brought it back here because of obstruction. I love avoiding obstruction. I prefer re-entry than looking at my trade, going back, instead of me taking profit and actually re-entering another position. That way I've secured this profit of the first two trades, now going through the second, then the third entry. So that was what happened here. Took all my profit from this particular two trades because I saw this obstruction, and this obstruction also gave us a little reaction, but I knew that the reaction wasn't going to be too strong because this is also a minor resistance here. This is also a minor resistance, so my TP was here. So the moment the market cut to this level, I was out of the market immediately, and that is how I actually secured this particular 4 trades. So this is a swing trade, this is a swing trade, this is a 30-minute time frame swing trade, and irrespective, on a on the Thursday, 7th August 2025, I also caught this particular trade on EURUSD on the 5 minutes time frame. So that is how I actually caught all these trades. So thanks for watching my trade recap, and I'm gonna see you guys on the next one. Peace out.